Hey everyone. Well, thank you for joining us for the third installment of our virtual Venture in the Capital series. We're so happy to have you all here. And today I have the pleasure of introducing Adam Fisher, who's a partner at Bessemer Venture Partners, is one of Israel's most prolific and successful venture capitalists. With over 2 decades of experience, he has invested in more than 60 companies, particularly at seed and Series A stages, and achieving 24 successful exits. His portfolio includes Israeli tech giants like Whisk, Fiverr, and Habana. Adam's investments span SaaS, fintech, AI, marketplace, and consumer, with a keen focus on cloud companies such as Hibob, Melio, and Yotpo. Uh, he has played a crucial role in shaping Israel's startup ecosystem, with Bessemer investing over 1 billion in the last decade. Known for a strategic approach of focusing on smaller markets, Adam consistently identifies disruptive startups. He actively serves on the boards of numerous high-growth companies, including Fiverr, Hibob, and DriveNets. He's also a fellow Hoya and a graduate of Georgetown School of Foreign Service. Thank you so much for being here with us today, Adam. How are you?
Doing great. Thank you, Drew.
All right. Well, I'd like to start and kind of bring us back to Georgetown, and that you're a fellow Hoya, and as mentioned, a graduate of the SFS. And looking back on your time at the Hilltop, could you reflect on how your time at Georgetown, both academically and personally, influenced your mindset as a venture capitalist?
Yeah, it's hard to draw a connection between my time there and venture capital, although they actually did coincide, but not in the ways you would expect. I went to Georgetown, the School of Foreign Service. I actually thought I would go either into diplomacy or in academia. I had no interest in business. It was not something my family really encouraged or spoke about, or I didn't have exposure to it. And I certainly didn't have exposure to high tech and startups. So it was really foreign territory. Uh, I think two things happened during my time at Georgetown. The first was I got involved in a program. I don't know if it still exists. It's called International Business Diplomacy, IBD. I think they call it a concentration within School of Foreign Service. I'm dating myself, but that's what it was, and that exposed me for the first time to the strategic thought that goes into business. Because I'd always approached business or thought about it much more from a pure either kind of stock market, buying stocks, or accounting. I didn't really understand what business was. Uh, and so that was the first thing. And the second thing is probably with the encouragement of the School of Foreign Service, I did a year abroad, a junior year abroad, which many students at that time certainly did, although most went to fun places like Spain and the UK and France. I went to Israel and I went to the Hebrew University of Jerusalem. And upon arriving, and this probably also has something to do with my Georgetown roots, I looked for an internship. I had interned my freshman year, my sophomore year, and the internship that was offered to me was at a venture capital fund. And by chance, I'd read an article about Israeli venture capital several months before, really by chance. And so I just leapt at that opportunity. And that's my fate. And that's how I arrived in the world of venture capital. I worked at that fund for that entire year. And then upon graduating, moved to Israel and rejoined that fund.
Got it. Well, after graduating, as you just mentioned, you moved there. What made you, after you moved, stay for so long?
Uh, a good old-fashioned Zionism. I mean, I come from a Zionist family. I myself am an immigrant to the U.S. I was born in South Africa. My grandparents were immigrants as well. My great-grandparents were immigrants. Like many families, we're kind of been wandering for a long time, and Israel was always very kind of strong in our hearts and minds. It has not always been an easy place to move to. Originally, for all numbers of reasons. Uh, uh, Going back, a century. In fact, the first ancestor of mine that moved there was in 1898. And I love mentioning that because I moved there in 1998, 100 years later. And back then, when he moved there, like it was malaria. That's what killed off people. It was not a place that was very welcoming. And later on, it was in the 1920s when my great grandfather moved there. It was difficult for other reasons that I won't go into. In the 1960s, when my father and grandfather moved there temporarily, it turned out it was due to economic circumstance. It was a very difficult period. And so I decided it was a different time. I could do it. My year abroad had proven that it's a much more, how do I say it, hospitable place in the sense that it's really not so much of a challenge. And I saw the beginnings of a career there around venture capital that really excited me. So altogether, I felt like I could make a life there. Don't want to make it sound like I knew that I would be here for as long as I've been. I actually had a short-term kind of mindset. I'd said I would master the language, the culture, and kind of have an option, so to speak, to move there later or again later in life. But it turns out that found a good job, uh, found a wife, and the rest is history.
Well, I guess part of your journey there, I want to ask about kind of your investment focus. And you have this unique categorization that you've developed for early stage companies. And you said you group them into three distinct categories, being amazing, smart, or crazy. Um, what defines each of these categories, and how does this classification guide influence your investment decisions?
Okay, so that comes from an old blog post of mine. I'm surprised. I don't remember. I'm surprised you found that somewhere. I guess maybe it was on our website.
We do our
Yeah,
research.
okay. So, early stage investing is very challenging because there's no data. There are typically isn't even a product. Even if there is technology, it doesn't mean much. And so it's very challenging to have any kind of reason to invest. Obviously, if it's an experienced team that's done it before, well, that might be a reason. Uh, but otherwise, you're going on very little. And so you have to develop what I would consider mental frameworks that allow you to move forward, allow you to build conviction. Uh, because it's somewhat, again, it's divorced from data. And this is a challenging concept to understand because so much about investing, especially if you read about it and read about venture capital, talk about metrics and how to measure this and how to look for that and measure the growth. And that's fantastic. But often it takes 3 years for a company to even reach that point where there are metrics to analyze, where they even make sense. And even when there are metrics, sometimes they don't always move in the way you would think they would. It's not always up and to the right. That's easy. Anybody can do that. And so you have to develop mental frameworks that allow you to move forward, which is not to say that the mental frameworks solve the riddle for you. It doesn't tell you that it's awesome or it's going to be successful, but it allows you to move forward. And so at one point, I'm constantly revising, coming up with new ways. At one point, I did categorize companies like that fairly briefly. Amazing typically was a technology breakthrough and claim which I would often describe as, well, if I tried to find, if I went to two different experts to tell me what they thought, one would say, oh, that already exists, it's easy, and the other one would tell me it's impossible. And that for me was always an example of, okay, perfect. That means there's something interesting here. Uh, I think the smart was usually something on the business model. There was some kind of a unique twist that others weren't paying attention to, often combined with a product that made it really smart. And back at the time, it had a lot to do with subscriptions, how to create uh, move from license to subscriptions or free product to subscriptions if it's consumer. And I think the last one, crazy, were things that really just sounded crazy. And the classic example I used, I think at the time, was Fiverr. I mean, Fiverr was a marketplace for $5 services. It sounds ridiculous when you say it like that. But they're now, their sales are upwards of $400 million a year. It's a very successful company and successful investment.
Well, I actually want to ask you about including Fiverr, in that some of your smallest investments have become your most prominent outcomes. And you were the first institutional investor into both Fiverr and Wix. And I'm curious what did you see, one, so early in these investments? And then two, is it just a coincidence that they were so small in their initial checks?
Now, the check size had to do with the era for the most part. This is circa 2008 and 2010, respectively, Wix and Fiverr. Back then, a big fund was like 500, 600, $700 million. That was the size of the fund that we were investing in. We were a big fund. to invest $2 or $3 million, which is what I invested in either company at the time, made sense. The costs were lower, salaries were lower, rents were lower, uh, and uh, and so that wasn't unusually low. I know it sounds very small. I know it was a little, maybe in a smaller range, um, but it wasn't too small. I think the equivalent today maybe like $5 or $6 million. The what I saw was quite different. They're kind of two extremes. With Wix, I actually saw something that I'd never seen before, at least in Israel. I saw um, a team that was very focused on product and marketing, which is unusual because typically we find Israeli companies that are very focused on technology, to a lesser extent product, and only later on things like marketing and sales. Wix, from the very beginning, including its name and its three-letter URL, was always focused on how they understood that marketing was the key to success, was the key to distribution, and that was refreshing for me, at least again, coming from the Israeli side. Now, they also had a great technology that enabled a certain product, but it was the combination that said, wow, this is interesting. I understand this more and what it could be. Uh, but that's about it. I mean, there was a strong team. I liked the team. I enjoyed working with them. But to be honest, there was so much risk there, and I struggle to explain exactly what else I saw. I think I kind of fell in love with the idea that uh, building content on the web should not require uh, being able to write a line of code. That appealed to me as a non-technical person. This is where my background actually played well. I think if you were to talk to a technical person at the time, they might have said, no, it should remain. It can never be as good as somebody coding. And I just said that doesn't make sense. If you were to tell me 10 years from now that still every website would be handed off to coders and Flash designers, that's what it was at the time, that doesn't make any sense. We had already seen what was happening in social media, and I had a sense that with MySpace and early years of Facebook, that people are going to want to create things on their own. They're not going to want to hire somebody. In the case of Fiverr, it was honestly just metrics. Uh, Fiverr had the good fortune of very quickly being featured on, I think it was Yahoo homepage the day it was released, and they had traffic, and that traffic converted very consistently, perhaps because of the novelty of it, but it brought lots of sellers and buyers, which is very, very hard typically to get working in a marketplace. When we saw that happening and just consistently growing and these transactions consistently happening, uh, I couldn't make sense of it, meaning I couldn't quite understand what motivated people to sell something for $5, to buy something for $5. But the numbers were such that I said, there's something here. Uh, and worst case, we lose $2 million. I think it was actually $4 million. Uh, and in a good case, we make a lot. And it was a very successful investment. And again, the team was also fantastic, but that's like a prerequisite.
Interesting. Well, you mentioned before, I mean, you mentioned fund sizes and how they've changed over time. And I'm curious, Bessemer now focus on a variety of stages and sectors and has scaled to maybe a little bit off, but circa about 20 billion under management. Um, and curious, I mean, what were the biggest challenges of when you were investing, like you mentioned, in Wix and Fiverr then, and smaller fund sizes to investing where you are today? What has been the biggest challenges in scaling to your current size? And then also being able to kind of allocate your funds as effectively as you did with smaller fund sizes.
Right. So there's two parts to that question, I think. The one is about how does a fund scale, and the second is about how do you actually invest it as an individual investor. There are funds that grow like an asset manager. They want more assets to manage, and they'll figure out how to invest it. And why do they do that? Because of the fees, because of the power that comes from having an enormous platform, because of the great people that you can afford to hire. That's not Bessemer. Uh, I won't name the funds that do that, but they're usually typically funds that come out of nowhere and all of a sudden have billions of dollars under management. Bessemer's grown from within. The vast majority of our partners are promoted from within. They've started as analysts, associates, vice presidents, or former entrepreneurs. And there's a common culture, which allows us then over time, when when they become promoted and they receive a checkbook, so to speak, uh, they also can get allocation to invest. And so that's how we build our fund. We build our fund based on the ability of each of our investors to invest a certain amount. And that amount has not grown remarkably over the years. It's been fairly consistent. So we've been growing by growing our investment team, but very methodically. Um, at the same time, the market's changed over the last 25 years. Uh, Larger financings, simply based on everything from inflation to what it takes to compete with other startups and larger companies. And secondly, the amount of time it takes for a company to reach the stage at which it can be an independent company or go public. When I started venture capital, $20 million of revenue was pretty much what you needed to IPO in 1999 and 2000. It's a fascinating number. These companies were typically also profitable or nearing profitability at that point. These days, it's 10 times that amount, 10 times at least. I mean, even 200 is somewhat. Right now, in the current market, those companies are not going public. Only companies that are going public are at 500, 600. So that's an extra 3, 5 years of financing. And it doesn't mean you can be, because of the competition, it means you still have to be investing in growth. And you still have to be fending off the competition, which means yet further capital. So for us, that also is very important because it allows us to have the capital for what we call follow-on investments. Uh, and so this leads into the last part of the question. What is the biggest challenge, at least for me as an investor, as an early stage investor? It's those later stages where I'm very happy with how the company's performing. I'm actually thrilled with the investment. And now there's an opportunity. The company's raising another 100 or $200 million. And we have the right, what we call the preemptive right to retain our ownership, to buy our percentage ownership of the new round, or even to invest beyond that. And it's not obvious whether we should. The price is obviously at that point very high. We've done very well. Why do you want to expose additional capital? And that's the hardest thing for me. And to this day, I struggle at those later stages, even in my favorite companies.
You've mentioned, I mean, out of all 24 of your exits, at some point in every single one, you had the opportunity to invest more. Um,
Right. That by nature of the preemptive right that you get as a preferred investor. Preferred shareholders, typically one of the main features is not just the protection of the investment at exit, meaning you get your capital back, or you get it on an as converted basis. The second thing is that you have a right to retain that ownership over time. So when a company raises additional capital, you can essentially invest that amount such that you retain the same amount. And so that's what I mean by the opportunity to invest more. Uh, to actually lead subsequent rounds, yes, there also have been opportunities, but that's sometimes a little bit harder because it sometimes puts you on the opposite side of the table of the entrepreneur that you're already working with.
well, curious, in one of those companies that it's consecutively went to go raise large rounds is Melio Payments, which you invested in 2018. Um, and you even helped famously choose their name. And I'll ask you about your naming article later. But the company has since seen significant growth. It raised 144 million in 2020, an additional 150 million in 2024. And I'm curious, what unique qualities did you see in Melio's approach to B2B payments that convinced you to invest? And then how has the company's evolution aligned with or kind of surpassed your initial expectations to either invest consecutively or not?
Emilio was very early stage. It was even earlier than Wix and Fiverr. It was at inception. There was no company when we met the team. Uh, I fell in love with the team. Thought they were fantastic, a unique combination of skills and backgrounds. And they fell in love with a certain problem, a certain insight that they had, which is that it makes no sense that small businesses are still sending checks to one another to pay their suppliers and vendors. At one point it was very high, 100% of businesses, and at some point in the mid 2000s, through digital payments, it had gone down to about 50%. But then it got stuck, and we're trying to figure out, why did it get stuck? Surely there are technologies that allow you to pay digitally. What is it unique about the U.S. SMB market that did that? And so they tried to figure out what that was, and they realized it was a combination of factors. Uh, and that they had based on that, they had an idea for a product which was uh, partially about payments, but actually it turned out it's much more about workflow of how to enable a small business to pay the vendor the way the small business wants to pay, but such that the vendor can receive the payment the way they want to receive it. In other words, to abstract those demands. Uh, And we thought that was an interesting insight. Here as well, we seeded it with only a $2 million investment, um, and it has since grown into a very large company. Now, B2B payments was not a thing. Today, maybe it is a sector. At the time, I don't remember how we referred to it. Um, it's always tough when you're doing something in an area in a segment or sector that doesn't have a name yet. It seems crazy. And only over time, when the segment emerges, does it seem so obvious in retrospect. Although most people forget that it wasn't a segment.
And have you guys kept pro rata and consecutively invested continuously over time?
Yes, we remain the largest shareholder. We've invested a lot of money in the company.
Okay. Um, and I want to go back and ask you a little bit about Israel versus kind of US markets. And I mean, given your experience just being at an amazing firm and that has a kind of a global reach, how would you compare kind of Israel's startup ecosystem, investment landscape to that of the United States? And what have you found unique kind of about Israel's startup ecosystem?
Okay. Yeah, so there are a lot of similarities, but there are a lot of differences. I'll focus on the differences. Uh, I'll start by saying, people often ask the difference between Silicon Valley and Israel, and I point out that Silicon Valley is where American entrepreneurs or global entrepreneurs go to create their company or to join a company, whereas Israel's not a place you go to create a company. It's a place that creates companies. And I say this because the culture in Israel is uniquely entrepreneurial and uniquely focused on innovation. There's something about the culture over the last 20, 30 years, but actually going back to its original foundings that just prizes innovation. Now, it wasn't always about capitalism. Israel started as a socialist country, but there was a lot of pride in doing things differently, in being creative, and that continues. Uh, the other thing I'll mention is about founders themselves. Uh, they are often founding companies with people they've known almost their entire life. I can't tell you how many times I've seen a duo of founders who tell me they were in grade school together or in high school together. Uh, that would be very atypical of a U.S. team for the simple reason that people in the U.S. move around a lot, right? For university and then afterwards for their career. Sometimes it happens that they move together or they grew up in the valley and they go to Stanford. Sure, that happens. That is not the typical route. Whereas in Israel, it's just too small. People really do stick together. And if they migrate within Israel, they're all moving to the same place, which is the greater Tel Aviv metropolitan area. Um, and so why is that important? It means you do have fairly strong, those kind of strong relationships are very, very powerful in building a company. It's a very strong foundation because otherwise it could be a risk, founders not getting along or not really contributing equally. Uh, Israeli founders are often typically more technical, just owing to how Israeli tech industry works and where it's found its kind of footing over the years. It's found its footing by being really innovative on the product and tech side, less so on the business side. And that's because we're far from the market. Every Israeli startup focuses foremost on the US market. We come at it as outsiders. We come at it, I always like to say, as like an immigrant. Uh, and we don't know the business culture. We don't know the consumer culture even. Uh, Now there are disadvantages that are obvious, but there are also some advantages when you come as an outsider. You observe things, you look for holes, you look for opportunities that others may take for granted. And that also is something that characterizes Israeli startups as a little bit different and why sometimes they'll be pioneers in a segment that others didn't pay attention to. Uh, and then maybe the final thing I'll point out, although that's also changing, is uh, Israeli startups have typically been capital deprived. It's been harder to raise capital, certainly not the amounts you can raise in the US, and they've been uh, not as good as at both raising that capital and spending it. And by spending it, what I'm talking about is the ability to spend to grow. Now, it might seem easy, trivial. It's not. It's one thing to raise a lot of money. It's quite another to be able to spend it, whether it's inefficiently or efficiently, to grow. Um, and that is still a challenge that a lot of Israeli companies are still struggling with. In the US, they're often much better at using capital to grow.
Curious, you mentioned the highly technical part of Israeli founders. And I know there was a lot of lure around kind of Unit 81, the IDF's Unit 81, which is, really highly technical unit within, Israel's military intelligence directorate. They've become a vanguard of the Israeli startup industry. I think over 100 alumni have started 50 startups, raising billions. Um, Curious, have you ever interacted with specific groups like that are highly technical that have emerged out of the IDF? And then if so, why do you think it breeds such high talent?
So Unit 81 is just one unit. It's actually the smaller one. I mean, their numbers actually may sound like Unit 81, but the bigger one is 8200,
Yeah.
which is more associated with cybersecurity. Look, the first thing to understand is that most Israelis serve in the military. Um, and from the military's perspective, that means they have kind of the litter's pick of the best and brightest to pull into top units. It's a luxury that few intelligence agencies in the world have. But in Israel, it's also become, and it's very clear, a career path. And so it's very much sought after uh, by young Israelis in high school already. They're tested and they take certain types of programs that will help them get better access to the better units. But there are lots of units that are like that focus on technology and on innovation. And within the military, it's also quite unique in how, not just with regards to intelligence and tech, but across the military, because it's a people's military, um, there's a lot more bottoms up and kind of empowerment from a very young age and innovation, real emphasis on innovation. Uh, Beyond that, everything from relatively limited resources, certainly compared to U.S., the NSA or the U.S. military, also push them to think creatively of how to do more with less, how to cut costs. Um, and finally, because we're very influenced by people, who surround you, the people your commander perhaps who's gone on to start a startup, or somebody who was there 10 years before who was in the unit, or the brother of, and so what's happened over the last 20 years is you can't avoid it. At this point, it's very hard to keep very talented people in these units because it's just too easy to pull them out, their fellow, their friends, and pull them out into startups. Uh, and it's this kind of virtuous cycle now that is literally impossible to stop. Uh, what I describe it, when I describe it to people, I describe it as kind of almost like a mind virus, only it's entrepreneurialism. And there's no cure for it because once you see so much of it around you and you hear about it and it's again it's people in your that you went to university with, or in the military with, or your sister-in-law, you just can't avoid it, and you realize that that's the likely path for you. If not to join a startup, then to start one. Um, as a result, we probably have too many entrepreneurs. At least that's the way I feel. But that's a great situation to be in, so we can find the best.
And curious, the with the ongoing regional conflict, um, how do you think that the current kind of geopolitical situation has impacted your investment strategy, but also, we've seen obviously increased government spending in defense and cybersecurity investments in areas. And has this led you yourself and then also Bessemer as a firm to focus more on defense tech? Um, or are you seeing just kind of a general boom across Israel's kind of famed cybersecurity sector?
So there's, I haven't changed my investment approach. Um, there were a few months when the war started that everything kind of came to a halt because of the number of people that were taken into reserves and just the overall shock in the nation. Uh, but fairly quickly, things returned to normal, even in terms of entrepreneurs looking to raise money and you start starting companies. And I continue to invest in all the sectors I did before, which is a very broad. Uh, it's, it's enterprise applications. I do gaming and consumer, um, cloud infrastructure, and of course cybersecurity. It's fairly broad. Uh, the the growth in cybersecurity, I would say, is completely unrelated to the local conflict, where that's not a threat that Israel faces from Gaza or its neighbors. It does to a certain extent from Iran, but this is a global issue, and the threats that the U.S. and other Western um, countries and companies face is everything from Russian to Chinese and North Korean and Iranian. That is a growth industry, probably for geopolitical reasons, but also technical reasons, and it's going to continue to grow. I think what's unique about Israel in the last few years is that we've recognized that talent is not just exceptional from a technical standpoint, it's exceptional from a business standpoint, which is actually something I admittedly missed. Uh, I didn't appreciate that they would be able to figure out how to build companies, and now Israeli cybersecurity companies or I'd say Israel is the leading place for cybersecurity companies. It's not another place. It is the leading place, which is quite remarkable. It means that even an Israeli company is starting after an American company could actually catch them and exceed them, which I've never seen before in other sectors. Uh, the one thing that, of course, has grown as a result of the war, but also the war in Ukraine, is defense tech. Um, but again, there's much broader geopolitical reasons that this is happening relating to uh, uh, the growth and investment in military technologies in China and just overall changing dynamics of what militaries need or can use to fight. Everything from AI to drones to the use of consumer electronics as more advanced military hardware than legacy. So it's an enormous opportunity from a I'm not sure, not yet convinced it's an enormous opportunity from a venture perspective, and here I may differ from previous speakers. Uh, we're looking at these companies. We've made a few investments in the US, more focused on the software side of it, but so much of defense tech is really about hardware, systems, services, the kind of things that don't lend themselves to high margin or efficient or low, not very capital intensive companies. And so I've learned the hard way how to lose money in hardware over the decades, and I'm not rushing back into it.
Not conducive to power law returns.
No, I don't think so.
Well, staying on the idea of current markets, I think there's been a lot of people in venture that have been hoping, as with 2024, 2025 will be a rebound in IPO markets, and kind of the market will be able to capitalize on the momentum AI has, et cetera. Um, and for you, I'm curious, with, you know, the AI quote unquote hype cycle that's going on right now, what are the key indicators for you that you're in a current hype cycle, and then how do you avoid buying into the said hype of that cycle?
So we, it's hard to say that we're in a hype cycle because AI is real. It's disruptive. It's foundationally disruptive. It's affecting everything. There's no question of that. There's also no question that there are going to be new businesses and enormous businesses that are going to come as a result of AI. Uh, the question is how many companies can be supported by that transition? How many new successful companies are there going to be? And um, and what is a safe way to invest in these companies? Uh, there, there are definitely things that would characterize this as a hype cycle. The examples are uh, new companies being created and achieving multi-billion dollar valuations at inception. We've never seen that before in any previous era. You may ask, what could possibly make a 20-person or 5-person team worth 5 billion, $10 billion? I'm sure there's some answer, but it doesn't really make sense. It's looking very far into the future. Other examples are companies growing from zero to, let's just call it, $30 million in 12 months. And you may say, well, wait a minute, how is that possible? What are they selling? If it's so easy for them to do that, well, surely others can do that as well. Uh, uh, and here as well, the problem with AI that begins to emerge is that almost every company is relying on yet another company to supply a major part of its technology stack. That's exactly what I'm able to grow so quickly, and and that's problematic because it means you're dependent. That source may be a competitor, and it means that competitor that source may also be supplying, likely is enabling your competitors. And so it reminds me a lot of the dot-com era, uh, but it's always different. Don't get me wrong. It doesn't mean it's going to all implode all of a sudden or that it's worthless. These are real businesses. But the last thing I'll just mention, we've seen this multiple times. We've seen not only the fastest growing companies in the history of technology investing, we've also seen the fastest shrinking companies in the history of technology investing. Meaning, and why is that? Typically because another company came out with a better product or a cheaper product, and there was no loyalty or stickiness in the product. It was very, very easy for users to switch. You can think about it on a consumer level, but also on business for businesses. And so that makes it for a very wild environment right now.
Very interesting. I'm curious. I mean, you've another thing you've said about kind of investment cycles is that one of the best pieces of advice that you've ever received in terms of investment advice is that 90% of the value happens in the last 12 or 18 months of a company's life. Um, can you elaborate on what this means and why you believe that's such great advice?
Yeah, I think one of my partners just mentioned it to me once. I'm not sure. It wasn't so much advice, it was just more of an observation that patience, venture capital requires a lot of patience. Um, and first of all, growth is not typically linear in these early companies. It really isn't. Uh, when you're looking for case studies, sure, they're going to choose the ones that grow linearly and all look nice. But the reality is very different. Um, but even when it does grow linearly, sorry, when it doesn't grow linearly, we'll just say, no, I'll just say when it does grow, the value that it's creating for shareholders does not necessarily grow at the same pace. It may it may take a long time for the market to recognize and appreciate that. I'll even use Wix as an example. The market did not appreciate Wix. If you go back and look when it went public, it was valued at a very low value. The market didn't understand it. It didn't appreciate it. And it took probably 3 years post IPO for the market to finally recognize what it is. It's easy now to look at it, but at the time, they had a hard time with what we call cohort subscriptions as opposed to individual subscriptions, and a host of other things. And the point here is that it often turns out that only towards the end does the value really accrue to shareholders. Now, there are other examples of companies that were struggling, but they had value. And it's just a matter of finding the right buyer who would appreciate it. And then all of a sudden, all the value is created. I had a company called Prospera, which was a software company in the agricultural world. So they were using software to help farmers understand the output of their fields and what inputs can be changed to improve yields. Ultimately, they were really a struggling company for a long time. We had revenues, but it was very hard to sell into these markets, and they were just ultimately very difficult customers. But probably it was like in the fifth or sixth year, we began to form relationships with certain partners, and they competed to partner and ultimately buy the company. And the company was sold for, I think it was $300 million on only 20 or $24 million invested. And of course, that's a perfect example of how almost all of the value accrued in the last 3 months of the company's existence. So it's a combination of patience and understanding that sometimes the market doesn't recognize what it's staring at.
Interesting. Um, well, in investing, you've also stated you support first-time entrepreneurs, or you prefer supporting first-time entrepreneurs. Is there a reason that's the case?
I probably said that because people accuse me of only funding second-time entrepreneurs. Because I have a lot of them because they come to me based on having been around for a long time. Uh, so I probably am emphasizing I like first-time entrepreneurs because because I appreciate them and the market is obviously the market of second-time entrepreneurs is obviously much more limited. No, look, first-time entrepreneurs uh, are great to work with. They come with a level of it's a combination of kind of both their naivety, but also their dreaming that I love. Um, they're very open-minded. They come with ideas that I have not heard before, or they ask good questions that nobody's asked before, and I have to think about, well, let me think about how I want to answer that. Uh, and They just bring energy. Typically younger, they bring energy that is essential to a startup. Now, older entrepreneurs can also do that, but the younger ones are move at a pace and have kind of a work ethic that is off the charts. And so that's why I have to emphasize that I really like first-time entrepreneurs as well.
Well, in looking at founders as well and entrepreneurs, you've been adamant that it's very important for founders to maintain hobbies outside of work. Um, and I'm curious, can you share some of the most intriguing or unusual hobbies you've encountered among successful founders?
Wow, okay. Um, they often don't have time for hobbies. That's the truth. It's like advice that it's easy to give and hard to take. And I give it to my former self because when I was cutting my teeth in the early years of venture capital, I had no time. It took me a while to realize the importance of having something else to distract you and to kind of measure your progress on that's completely uncorrelated with the business. The A lot of entrepreneurs that I see, they're into sport of various types. Sometimes extreme sport even. It kind of goes with the personality of being somewhat risk averse. Um, Others end up doing things like taking out a pilot's license or a skipper's license, which is very popular here, uh, which I think also allows them to disconnect and focus on something else. But it could be something as, prosaic as reading, or, or more, something more on the social side. It's just a reminder that there's life outside of the business, but that's, like I said, it's easier said than received.
Understood. Well, I promised that we'd go back to your naming article in the beginning of us speaking. And curious, in your article about choosing the right name for a startup, you argue that while great startups will succeed regardless of their bizarre or ordinary names, selecting the right name can be a significant boost. Um, and why do you believe a well-chosen name holds such power, especially considering there are many, many other factors contributing to a startup success?
Yeah, I don't think it holds so much power. It's a bit of a tongue-in-cheek kind of blog post. Look, Israeli companies have horrible names on average. If I was to tell American companies to choose their name, but they're focused on the Brazilian market and it has to be in Portuguese, it's going to stink as well. And they often choose names that sound cute or smart or unique, and they're none of those. They get lost. And so I don't remember all the examples, but the typical mistakes I see are it's a name they look for too much. They try to create too much meaning in a name. They want to reflect the. Oftentimes, it's something with innovation or smart, or they want something that will be the intel of the future. But they're all taken. There's nothing left. There's nothing left, and they all think the same way because most of them are engineers by background, and so it's more of an attempt to allow them to open up a bit and realize that actually the meaning of the name is not important at all. It needs to be easy, very memorable, easy to pronounce, and flexible so that as you change your model or your product even, you don't have to change your name.
Understood. Um,
So yeah, so when I meet the companies early, I try and get them off the bad names and get them onto something that doesn't mean much but sounds cool.
do you have a favorite name you've been a part of in the process?
Um, Embarrassingly, the ones I love are the companies that didn't succeed. So I won't mention those. There are some nice ones. Look, I was involved in naming of Melio. I think the entrepreneur himself, the CEO actually came up with the name, but we worked hard to change the original. They had two original names. Um, and like the first name was Smart Check, just to give you a sense. Like the first name is almost always synonymous with the product um, of companies. They're often two names, they're mouthfuls, they have spellings that people will mispronounce again because it's not your first language. And so, yeah, I think that article was very much geared to the local audience, and it's probably a little bit less relevant for Americans. But at the end of the day, like I said, companies will succeed regardless. And in retrospect, the name will sound like smart or cool, or you won't even ask yourself, wait a minute, where does that name even come from? That was a stupid name. Like, I mean, Spotify or there are lots of names when you think about it that we YouTube that like they roll off our tongues, but they're not good names at all.
Yeah, no, absolutely. Well, we always end with a rapid fire. So the idea is I'm going to ask you five questions and give you about 30 seconds each to respond. So
Okay.
the first is, what's your favorite Israeli food?
Uh, I would say probably shakshuka and also kube. I don't know if you know what those are.
Okay, I like them both.
Okay.
What is your biggest miss as an investor?
Wiz and Monday, two of Israel's biggest companies, one private, one public. I had multiple shots on goal and said no.
And why'd you pass on each?
There's always a reason. There's not much there. It was very early. In each case was a little bit different. In the case of Wiz, it was I didn't like the original idea, and in fact, the original idea was abandoned. Uh, and in the case of Monday, there were a lot of companies that had a similar product concept in those same years, and it was hard to see a big company being built when others were struggling. Um, and so it was just difficult to get excited about it. That's the truth.
So, who has been your biggest mentor?
I don't really have a mentor. I mean, I would say, my fellow partners who brought different experiences to the table and we learned from one another. But never had a true mentor. I find insights and a sort form of mentoring often in reading about other people's experiences in very different areas, from history and philosophy, and even literature. So I get mentored in other ways than is typical.
Okay. Considering this is a Georgetown conference, what's your favorite memory from the hilltop?
Um, my favorite, probably rowing on the Potomac.
Were you on the rowing team?
Yeah,
Lightweight, heavyweight?
lightweight, borderline.
Um, and then our last question is, what do you think is the greatest misconception about Israeli startups?
I mean, there are a few. One is that they're all technical founders. Even I kind of alluded to that as well. But there are lots of uh, entrepreneurs that actually come from different fields. Uh, I mean, everything from law to medicine to psychology. I've got entrepreneurs that did not study, didn't go to technology units. So that's one. Probably the second one is that Israeli founders sell too early, and because there've been a lot of acquisitions of companies that investors or outsiders felt, oh, that was too early, what a shame. But the reality is, there's a reason why Israelis sometimes sell early. And the first is that they're given they receive offers, and the reason they receive offers is that in order to compete in a foreign market, you have to be ahead of the curve. When you're ahead of the curve, you get noticed eventually ahead of the business. And the second reason is that we're influenced by one another, people around us. So when your neighbors, I'm joking about neighbors, but when your neighbors are selling a company for $300 million, that seems like the thing to do. When they're selling companies for billions, that will seem like the thing to do, or taking public. And of course, that just changes over time. But when you're in the valley, you want to be like, Mark Zuckerberg. You don't want to be like some person who sold it for $300 million. And so that's constantly evolving. And that's why right now in Israel, I think we have, a very large number of multi-billion-dollar companies who are choosing not to sell. So I'm glad that perception has changed.
Well, Adam, I can't thank you enough for joining us. I know I learned a lot, and I'm sure everyone watching did as well. And I really, really enjoyed this. Thank you, thank you, thank you.
Thank you. It was fun. Hope everybody learned something.
And we'd love to get you back on the hilltop sometime.
I'd love to come back.